डियर व्यूअर्स, पिछले एपिसोड में मैंने जीएसटी का जो स्टेटस था 1 जून 2018 तक जो जीएसटी में डेवलपमेंट हुई थी उसके बारे में चर्चा की थी। अब हम ये जीएसटी का जो स्टेटस है 1 नवंबर 2022 इसके ऊपर चर्चा करेंगे और जीएसटी में जो डेवलपमेंट हुई है अभी तक अपडेटेड उसके बारे में जो रिसेंट इन्फॉर्मेशन है वो आपसे मैं शेयर करूंगा। जैसा कि पिछले एपिसोड में मैंने बताया था कि जीएसटी के जो सैलिएंट फीचर्स हैं कि दिस इज एप्लीकेबल ऑन द सप्लाई ऑफ गुड्स और सर्विसेज एज अगेंस्ट द अर्लियर कंसेप्ट ऑफ टैक्स ऑन द मैन्युफैक्चर और सेल ऑफ गुड्स और प्रोविजन सर्विस। इट इज ए डेस्टिनेशन बेस्ड कंजम्पशन टैक्स. Tax would accrue to the state or the union territory where the consumption takes place. This is known to everyone. Secondly, GST applies to all goods other than alcoholic liquor for human consumption and 5 petroleum products. These 5 petroleum products are petroleum crude, motor spirit, petrol, high-speed diesel, natural gas, and aviation turbine fuel. As on date, these goods are out of the purview of the GST tax net, and the traditional VAT is applicable on these goods by the respective states or union territories as per their own VAT code. In case of petroleum and petroleum products, it has been provided that these goods shall not be subjected to the levy of goods and service tax till the date notified by the GST Council. As far as the threshold exemption is concerned, as on date, after 5 years, the situation is threshold limit for aggregate annual turnover for exemption from registration and payment of GST for supplies of goods is 40 lakh. That means any person desiring GST registration, if its threshold limit, if its taxable turnover during the preceding year is below 40 lakh, then he do not need any registration under the GST Act. And for states Arunachal Pradesh, Manipur, Meghalaya, Mizoram, Nagaland, Puducherry, Sikkim, Telangana, Tripura and Uttarakhand, with effect from 1st April 2019, this taxable threshold limit, this registration threshold limit is 20 lakh. Himachal Pradesh was included in this special category state, but the state has opted for the limit of 40 lakh from the date 2019. The threshold limit for aggregate annual turnover for exemption from registration and payment of GST for suppliers of services is ₹20 lakh and 10 lakh. The persons desiring GST number in services sector, their threshold limit is 20 lakh and 10 lakh in case of states of Manipur, Mizoram, Nagaland and Tripura. Therefore, for all the viewers, taxpayers, tax professionals, officers and other stakeholders, the situation for registration under GST Act as on date 1st November 2020 is 40 lakhs and 20 lakhs in case of goods, and in case of services it is 20 lakh and 10 lakhs. The states which are under special category in case of goods are Arunachal Pradesh, Manipur, Meghalaya, Mizoram, Nagaland, Puducherry, Sikkim, Telangana, Tripura and Uttarakhand, for which this threshold limit for registration is 20 lakh. And in case of services, These states are Manipur, Mizoram, Nagaland, Tripura, where the threshold limit for registration under services sector is 10 lakhs. The next we come to the point of composition levy. As composition scheme has been devised in the GST system from the beginning, and for small businessmen being supplier of goods and supplier of restaurant services, this scheme is applicable. As on date, the threshold limit aggregate annual turnover up to rupees 1.5 crores. And in case of states of Arunachal Pradesh, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, Uttarakhand, this limit is 75 lakhs. They need to, these composition dealers, composition taxpayers need to pay tax equal to 1.5% to 5% on their aggregate annual turnover, depending upon the category of their business, and other exceptions, rules, and conditions apply, and needs to file his returns annually with quarterly payment from financial year 2019 to 20. Composition scheme has been made available for suppliers of services to those who are not eligible for composition scheme mentioned in above with a tax rate of 6%, 3% CGST, 3% SGST, having aggregate turnover in the preceding financial year up to 50 lakh. They would be liable to file one annual return with quarterly payment of taxes. This has been made effective from 1st April 2019. Taxpayer opting for composition levy is not allowed to collect any tax from his customers, nor is he entitled to claim any input tax credit. The taxable person doing business under composition scheme is neither entitled to get input tax credit on his purchases, neither the taxable person purchasing goods from him or services from him, they are entitled to get any ITC from such dealer. The benefit of composition scheme is not available to manufacturers of ice cream, pan masala, tobacco, and manufactured goods, tobacco substitute, fly ash bricks or fly ash aggregate with 90% or more fly ash content, fly ash blocks, bricks of fossil meals or similar siliceous earth, building bricks and earthen or roofing tiles. These are special exception under the composition scheme. The integrated tax is levied and collected on interstate supply of goods and services. Use of input tax. These are the salient features of the GST system as on 1st November 2020, which are under much use by the taxpayers, tax professionals, officers, or you can say relevant as on date from different angles of taxation. Second is use of input tax credit. Taxpayers are allowed to take credit of taxes paid on input tax credit and utilize the same for payment of output tax. However, no input tax credit on account of CGST is allowed to be utilized toward payment of SGST, UTGST, and vice versa. Input tax credit on account of IGST shall first be utilized towards payment of IGST, and the amount remaining, if any, may be utilized toward the payment of CGST and SGST or UTGST, as the case may be, in any order. Further, input tax credit on account of CGST, SGST, UTGST shall be utilized toward payment of IGST, CGST, SGST, or UTGST, as the case may be, only after input tax credit available on account of integrated tax has been utilized fully. GST from the beginning or from the concept stage of its commencement, as stated in its concept paper, is a largely technology driven taxation system. It is aimed to reduce the human interference to a great extent. This would lead to speedy decisions, more transparency, digital transparency. Ultimate objective of the GST taxation is to ensure the digital transparency in its administration. GST has given a major boost to the Make in India initiative of the Government of India by making goods and services produced in India competitive in the national as well as international market. Also, all imported goods are charged integrated tax IGST, which is equivalent to CGST and state GST. This brings equality with the taxation on domestic products. Under the GST regime, exports and supplies to SEZ are treated as zero-rated supplies. This ensures boosting of Indian exports in the international market, thus improving the balance of payments position. The exporter has the option to either pay integrated tax and claim its refund or export under LUT bond without tax and claim refund of input tax credit system. Next is GST Council. The mechanism of GST Council has been created in terms of the provisions of the Constitutional Amendment, that is 101 First Amendment Act 2016, to ensure harmonization on different aspects of GST between the states and the center as well as among states. As provided for in the Article 279 of the Constitution, the Goods and Service Tax Council was notified with effect from 12th September 2016. The council is comprised of Union Finance Minister, who is the ex-officio chairman of the council, Minister of State Revenue, and the State Finance Taxation Ministers as members. It makes recommendation to the Union and the states on almost all issues related to GST and all major decisions as regards policy, changes in law, rules, rates, etc. taken the recommendation of GST Council. Minimal interface. The physical interface between the taxpayer and the tax authorities is minimal under GST. To ensure this, circulars, guidelines, instructions are being issued by the CBIC, the competent authority, to make this interference to the minimum extent, so that the objective of the digital transparency of the GST system can be achieved. Some provisions which are implemented with this objective are as under. There is cross empowerment of officers belonging to central and state governments. Officers of the CGST have been empowered to act as proper officers as GST and vice versa. The taxpayer has to interact with only one authority. Lot has been done to ensure this cross empowerment of officers by dividing the taxpayers among the state officers and the central officers, leaving one important function, that is enforcement, that is kept common with the state and the central officers by special, under the special beings created for this purpose. Under the central regime there are DGI, DGGI, and under the states there are the enforcement wings or the flying wings, or by other names in other states as per their own practice. They are in place. The working, there are chances, there are some example, or there are some events when there comes the situations of overlapping of the working of these officers. On a particular taxpayer, suppose if the CGST has taken some action, proceeding, initiated some proceeding, the state officer also starts some initiation, some proceeding on that. There is a clear-cut circular issued by the CBIC that if any action is taken by the state, that has to state enforcement, that has to be concluded by the state officer only. And similarly the position with the CGST officer. Suppose if any dealer falling under jurisdiction of the state officer, the central enforcement or DGI has initiated any action or any proceeding against that dealer, they are authorized to conclude that proceeding to its logical end. And there was a misconception or misunderstanding between some taxpayers or tax professional or officers too, that if any dealer comes under jurisdiction of state, some cases were transferred to the state or by the state to some central authorities. But there is no need of doing such transfer, as the CBSE has issued circular much beginning in the year 2018 to deal these cases, especially by the enforcement beings at their own irrespective of any jurisdiction, so that the taxpayers can be clear enough in their minds how they have to work under the GST, whom they have to approach, and they should be aware about their rights and their duties under the GST Act, especially when enforcement wings take any action against them. Secondly, as far as registration is concerned, registration has been made online. That shall be deemed to have been granted if no deficiency is communicated to the applicant within 7 working days by the tax administration which has been allotted the examination of the application. If Aadhaar authentication is not done by the applicant, or if authentication fails, registration would be granted after physical verification of business commerce within 30 days. Taxable person shall himself assess the taxes payable, self-assessment. A facility of provision of self-assessment has been granted under the GST system and credit to the account of the government. What are the tax he assesses voluntarily? The return filed by the taxpayer would be treated as self-assessed. There is a special section, special rule created for this purpose. Payment of tax is to be made electronically through internet banking. Through the modes of real-time gross settlement, RTGS, National Electronic Fund Transfer, IMPS, Immediate Payment Service, Unified Payment Interface, smaller taxpayers are allowed to pay tax over the bank counter too. Taxpayers are allowed to keep and maintain accounts and other records in electronic form too. Then let's talk on the much debated, much vulnerable issue of input tax credit. This input tax credit is not a new thing under the taxation system. This was the part and parcel of the indirect tax system right from the ages of general sale tax. Although the input tax credit word was not attached to, was not tagged to this, but there was the component of input tax credit too. And under VAT system, there was specific provision for the input tax credit system, and in the VAT system also, it was the input tax credit which was the main locus standi for the entire attention of the tax administration officers, litigations, tax evasions, and much of the resources of the department officer were concentrated on this input tax credit system. Taxpayer is allowed, let us discuss input. Taxpayer is allowed to take credit of taxes paid on input tax, paid on inputs as self-assessed in his return. Taxpayer can take credit of taxes paid on all goods and services other than a few items in the negative list. Credit of taxes paid on inputs can be taken where the inputs are used for business purposes or for making taxable supplies. Unutilized input tax credit has been allowed to be carried forward. The facility of distribution tax credit for services amongst group companies has been provided for through the mechanism of input service distribution. Then the second much important aspect under GST system as on date is refunds. Time limit for claiming online refund has been kept at 2 years. Refund is granted within 16 days from the date of receipt of complete application. Interest is payable if refund is not sanctioned within the stipulated period of 16 days. If the refund claim is less than Rs 2 lakh, there is no need for the claimant to furnish any documentary evidence to prove that he has not passed on the incidence of tax to any other person. Refund of input credit is allowed in case of exports where the credit accumulation is on account of inverted duty structure, where the tax rate on input output is higher than that on inputs, bearing few exceptions. This inverted duty structure is attracted in certain category of business, mostly in case of pharma industries and in case of some shoes manufacturers, whereby some specific provisions has been made by the GST Council, keeping in view the health and life-saving medicine drugs at cheaper rates, because their inputs in case of pharma are at the rate of 18%, and mostly the final products of pharma medicines are at the rate of 12%. Therefore, automatically there accrues a refund of 18 minus 12 at the rate of 6% or 4 to 5% at least if the profit margin is adjusted. Similarly, the situation in case of shoes, where the input raw material is at the rate of 18%, but the output tax leviable on them is either 5% or 12%. In that case, there is sufficient amount of refund of ITC accrues. Then the demands, a new concept of sunset clause for tax disputes has been introduced in GST. It provides that adjudication order shall be issued. Tax demands. These demands is also not a new word in the taxation system. Demands are the part and parcel from the beginning of the taxation system. In the erstwhile General Sales Tax Act, VAT system, the demands were the main point of assessment for assessment of the performance of the department. These demands are divided into two parts. Demands of the due tax, tax short paid, or tax not paid, or tax on erroneously refunded amount. This is one part. This becomes the foremost and the obligatory duty of every taxman or the tax officer to recover this due tax. Second part, which is called additional demands. These additional demands are created other than return, which are not furnished by the taxpayer as per their return, or these demands come from the action of the department, intelligence sources. Enforcement or DGI are specially created for such demands. Additional demands. Under this category, the tax suppressed, the turnover suppressed by certain tax evaders is detected by these special beings of the department, and by following the procedure of the adjudication process, this tax is collected and deposited in the government exchequer. The adjudication order in the GST system, the adjudication time limit is 3 to 5 years. The taxes which are suppressed, not with the intention of any fraud or willful misstatement. These cases has to be expedited, has to be concluded within 3 years from the date of the cut-off date from the filing of the return for the concerned financial or concerned assessment year. And in case of cases of willful misstatement, suppression, frauds, this time limit has been prescribed under GST law of 5 years from the date of the return filing, annual return filing of that for the assessment year to which that case pertains. This time limit of 3 to 5 years has been prescribed because all these cases of additional demand, mostly the 90% cases of additional demands, comes under the purview of the enforcement wings of the DGI. And these cases, the foundation of these cases is dependent on the information, intelligence information, then the inquiries, then the investigation, which takes a long time because the inquiry has to be conducted as per the CPC, Civil Procedure Code. Oh, and the investigation has to be conducted as per the Civil Procedure Code. There is while conducting the inquiry and investigation, there are certain rights available to the taxpayer which have to be considered by the authorities concerned at the time of the inquiries, at the time of the investigation, and at the time of the adjudications. A complete due process of law has been prescribed to adjudicate these cases. And in most of these cases, there are certain provisions which are stringent provisions are prescribed. Just for example, under section 67, premises inspections, then 69, if there is a suppression or evasion of more than 5 crores, then there is a arrest of the persons. Then section 70, there is a inquiries from any person. Then 71, business premises. Then the inquiry and the investigation which is completed, which is conducted under section 70, which will give the abstract, the primary information to the concerned officer to make his mind, to draw the opinion as under which section he has to proceed further. Can he implement section 73, which is not a willful fraud, and 70 or 74, which is a willful fraud? There is a difference of penal provisions, amount of penalties under 73 and 74. But in the adjudication cases by the enforcement and DCI, most of the cases comes under section 74. When the inquiry is completed under section 70, the adjudication officer or the proper officer, they have to issue the preliminary statement of intimation, which is called DRC-01A. This DRC-01A has been specifically created under section 73 by the GST statute to give an optional opportunity to the taxpayer to give its compliance, to admit the proposed tax, interest or penalty, and to volunteer it to deposit within 30 days, if he admits, or in the part B, part A is the intimation of tax, interest and penalty. The part B consists of two parts. The first part, there is a 30 days time limit before the taxpayer to admit the intimation of the tax, interest and penalty in the part A. If he admits and deposit the tax by filing DRC03, then its proceedings can be concluded and acknowledgement is issued. If he do not accept this, by the second part of the form B of the DRC01A, by giving reasons for non-acceptance, then the next stage for the issuance of DRC01, that is called SCN, show cause notice, is initiated. While filing the form B, second part, where he rejects the department contention, department DRC01A, and he gives his certain grounds and submission or statements, these submission, statements and grounds, that become the responsibility of the officer concerned to inquire, investigate and ascertain those, and then if the officer finds any truth in that or some partial truth in that, that has to be communicated back to him and call him for further inquiry and investigation. And if he agrees with his version, then he can drop those proceedings, or if the officer do not satisfy with his explanation or the further inquiry and investigation, then the adjudication officer issues him the further notice before contemplating the show cause notice in the form DRC01 as why show cause notice or DRC01 should not be issued against you, by giving an opportunity of hearing. If he enjoys that, if he takes that opportunity to explain, to give an explanation, and after evaluating that explanation, if the officer finds any merit, then he can take the decision, or otherwise the officer goes for the issuance of the show cause notice or adjudication. The adjudication process is commenced with by issuing the DRC01. That is, DRC01 is a show cause notice, that is a detailed notice. The grounds for issuing the show cause notice are mentioned in detail, and a time is given to reply by the taxpayer, and the taxpayer can submit his reply, and the proceedings, adjudication proceedings, are conducted by the adjudication officer against the taxpayer, which have to be completed within the 5 years period as per the section 74. Next, alternate dispute resolution mechanism, advance ruling. An advance ruling provision has been incorporated in the GST from the very beginning. This is not the part of GST only. In the earlier tax regime, the advance ruling or the power to remove difficulties was vested with the taxation officers of the rank of commissioner or additional commissioner, and taxpayers, the aggrieved taxpayer, were using this tool to seek the clarifications and advance ruling on certain tax matter, tax rates, or certain other matters where they feel some confusion. The advance ruling can be sought on not only for new activities but also for existing activities. The facility of appeal, which was not there under the earlier central laws, has been provided in the GST law. The applicants of the department, if agreed with the advance ruling, would henceforth get the opportunity to file an appeal before the appellate authority of advance ruling. Advance ruling can be obtained more easily as there will be one advance ruling authority as also the advance appellate authority in every state. And all these provisions, whatever I have discussed, from the registration, from the refunds, ITC, return filing, advance ruling, appeals, are all system based now. Other provisions of GST. The provisions worth mentioning here are: the electronic invoicing system has been introduced for taxpayer with aggregate annual turnover of more than 500 crores from 1st October 2020 for B2B, business to business transactions, and for export invoices. The same was extended for taxpayer with aggregate annual turnovers of more than 100 crore from 1st January 2020. Further, the same has been extended for taxpayer with aggregate annual turnover of more than 50 crore from 1st April 2021. And for taxpayer with aggregate annual turnover of more than 20 crores from 1st April 2022, and for taxpayer with aggregate annual turnover of more than 10 crores from 1st October 2020. And when the system, IT network system, the capacity building will be expanded, so the option can be given by the government in future for all the taxpayers to issue the invoices in electronic form, thereby reducing the need of the e-way bills or e-way system. E-commerce companies are required to collect tax at source in relation to any supplies made through their online platform under fulfillment model at the rate 2% on the net value of taxable supplies made through it, where the consideration in respect of such supply is collected by operator. Anti-profiteering measure has been incorporated in GST law to ensure that any benefits on account of reduction in tax rates or benefit on credit results in commercial reduction in prices of such goods and services. So these are the updated status of the GST as on 1st November 2022. After this, we will discuss the more relevant issues under the GST with the aim to providing education to the taxpayers, tax professionals, and other stakeholders, so that there could be greater awareness among the taxation system and about the IT system, because the whole GST system is a system based, computer common portal based. Common portal is the prescribed in the definition part of the GST Act. From the commencement of the GST system, the computer system, the IT system has been developed in stages, in steps. Therefore, at this time, there is all the necessary prerequisites of the GST administration has been achieved. Digital platforms, modules, and this innovation is under continuous development. And in the coming time, very soon, the whole GST system will be computerized. Thank you. Namaskar. We'll see you in the next episode very soon. Thank you.